And we're live. You're listening to Interchain FM, a regular podcast about all things blockchain interoperability. If you're seeking alpha in the Cosmos ecosystem, look no further. I'm your host, Django Unchained, and we're here with Brent today. He's the founder of Umee, a proof of stake decentralized lending and borrowing protocol that's native to the Cosmos network, that is built with Cosmos SDK and will soon bridge over to the ecosystem we know as Ethereum. Brent and I were former colleagues at Tendermint, and he spun out his own project shortly afterwards. He's a former bond trader who got his start through Consensus with a Y. Welcome, Brent.
Really, really great to be here, and yeah, it was a pleasure working with you at Tendermint on your team, and yeah, just happy to be building new stuff out there. It's a tremendous honor to be here.
Same here, Brent. So proud of you that you're building this thing and it's soon to launch. Is it in testnet right now?
Yeah, certainly. So we have a alpha mainnet working right now with full functionality, and we're planning to have a full-on mainnet in the next month, along with an incentivized testnet. So we got quite a few things cooking. We've had a series of many testnets, including adversarial, prior to this moment, and so we're really happy to be building this out.
Yeah, so first of all, what can people do with this protocol?
Definitely. So the main use case, initial use case of Umee is think of it as a cross-chain AAVE or cross-chain compound as its own base layer. So uh, platforms built on the Cosmos SDK are their own blockchain. They have their own self-sovereign validator set. So we allow users to be able to leverage assets on one blockchain to borrow on another blockchain. So imagine leveraging Cosmos Atoms to borrow ERC20 tokens on Ethereum, or leveraging ERC20 tokens on Ethereum to borrow things like the Cosmos Atom. Further down the roadmap, we are also figuring out some tools to better encapsulate time value of a crypto asset, but that's a little bit more into the near future.
Would you mind elaborating on what that means? The time value of an asset?
Certainly. So when you look at the investment landscape or economics or finance, one of the most important things in all of society, or possibly the universe, is time. Time is very important, and the way that human beings, users, uh, think about opportunity cost is based on, an internal rate preference. For example, if I'm a retail investor, I might look out for like 1,000% APY. I might try to look for 2x, 3x, returns when it comes to investments. Um, and that's kind of the psychology. A hedge fund might be a little different. Maybe they're willing to borrow from their prime broker at like Fed funds, and then they invest in something at Fed funds plus 50 basis points. An endowment with VCs is also different. Endowments and VCs have a 2 and 20 fee, and then they're expecting to earn like 100x on their 7-year investment. Same with like poverty. Like someone in poverty would have a negative rate preference, so they might think, I'd rather have $1 today instead of having $1.50 tomorrow, because I can use that to buy food today, because I need that today. Crypto has its own interesting dynamics. So someone's happy to borrow DAI from a borrowing and lending platform at 20% interest if they can invest it and get like a 1,000% APY somewhere. And so what we want to do with time is we want to encapsulate those values and those opportunity costs by figuring out a way to better define how the crypto ecosystem should perceive time, and to also introduce the concept of something like duration into the crypto space. Like, because right now crypto, the psychology is very like short term. Like most money markets are like just for sort of short term lending so that they can do some yield farming stuff. But when you introduce like longer durations, like years and multi-year durations, it creates an entirely new dynamic.
What do you envision happening in this multi-year roadmap?
Certainly. So the reason why we want to better define, time, duration, and opportunity cost is because um, the way we see Umee is that, in terms of near-term vision, we're a cross-chain borrowing and lending protocol. We allow assets to be borrowed across chains. Long-term, we see the $281 trillion debt markets out there. Anything lending, leverage, debt. It's all built on centralized systems that are not necessarily the most efficient. And we think that we can recreate those entire markets using DeFi and open source technology. And so in some ways, we really want to just open source the financial markets, and we want to build it in decentralized software as opposed to the current legacy rails.
Yeah, totally. I was just talking about this at Decentral, which is the legacy traditional finance system is totally gatekept, and like it or not, it's extremely regulated, right? Like some people will argue that regulation is good, some will argue that it's bad, but crypto in the DeFi space is arguably the most fair and free market there is, right? Anybody could come in and create a protocol and then kind of make it. And at the same time, the users on the other end are able to leverage it without having any disadvantage compared to the huge institutional player. Like everyone's kind of equal in this dynamic.
Oh, certainly. Yeah, part of it is that, legacy incumbents already have, a bit of a, first mover advantage in having, established different markets and formed, sort of, gatekeeper type entities before allowing, normal people to access stuff. Just taking lessons from, you know, uh, new types of financial paradigms. It's important to, allow access to this. And I think crypto just gives, human beings the basic human right to access these types of values. So definitely aligned with that.
Yeah. How did your background in bond trading lend itself to what you're building today?
Yeah, that's a good question. I spent, 6 years on a bond trading desk, and when I first learned about the industry, I in my naive interpretation, I was thinking, well, this is going to be based on logic, based on math, based on well structured, you know, finance and just uh, reasoning around the markets. And what I learned is that a
It's
lot of the
completely
legacy
irrational.
the legacy markets are not very yeah, it's exactly as you said. It's not structured very well. There's not as much reasoning. It's irrational and built on not like just not the best technological foundations. Like most of capital markets are still done with like pen and paper. Um, and we want to change that, and my experiences in that ecosystem really motivated me to want to build something new and see if there's any new ways to change that ecosystem.
Yeah, sure. And well, what sorts of risks are present in the TradFi paradigm that aren't in DeFi, and vice versa? What sorts of risks are in DeFi that aren't in TradFi? Like let's talk about it from the point of view of collateralization, right? In that just the TradFi world is over leveraged, whereas in the DeFi world, it's fully backed and collateralized. But at the same time, you get liquidated, better, more easily.
Totally, yeah. One scenario I remember is, when we were working with Jay Kwan, he talked about why he liked Bitcoin, and it's because he went through the mortgage crisis. Like he talked about how like his family survived through the mortgage crisis, and yeah, I experienced that myself. Like our family is going through the mortgage crisis as well. And back in 08, 09, it was just the most ridiculous market. Things were over levered due to poor infrastructure and not properly pricing of assets and MBS products. And interestingly enough, my first job, I traded mortgage-backed securities, and so I learned and I knew that market very well, and I had a sense on just roughly how broken it was. It had been broken ever since the 70s when MBS products were first invented. And so TradFi unfortunately has just different dynamics where, not the proper, improper infrastructure was used to originate these assets. And therefore, their configurations today and how they're built, like the $80 trillion bond market is broken from the foundation. I think that things can be built better using DeFi. To answer your question about challenges of DeFi, like what could be problems, as you mentioned, like liquidations can happen a bit more rapidly. In addition to rug pulls, in addition to people getting wrecked, in addition to price oracles that might not be the most effective, as well as front running by bots and some of these MEV perspectives. Um, uh, with this ecosystem, there are a lot of challenges, but I think a lot of these challenges can be overcome with just scale and just hardening, like making the right mistakes early on so that you can figure out how to harden these protocols. Good security auditing. Auditing is one of the most important things of this industry, and getting the right auditor out is just key to a protocol. So a lot of factors. It's definitely a deep question to think about.
One could argue that an attacker who exploited this daisy chain of DeFi protocols is an auditor, a very expensive one, who socialized it amongst users. I'm
Oh my
joking.
goodness.
I'm joking. Sorry. Dark joke. Anyway, yeah,
True.
right. Yes. So the mortgage-backed security paradigm is completely insecure. And what's interesting right now is, like, I want to talk about the risks, right? Because I don't think people are necessarily thinking about the risks uh, in a healthy framework, because a lot of people are attracted to the APYs, but not necessarily understanding of the full weight of the risks involved, which is, with more and more protocols stacking on top of each other, what ends up happening is, um, and with liquid staking and liquid collateral, what do you call that in Ethereum? They call the liquid collateralization, right?
I believe so. Yep.
Yeah, it's because they're not a staking token on Ethereum. It's just another token, and once you've LP'd it, you get an LP token, and then you could then collateralize that LP token and then borrow against that. And so we tend to have this daisy chain of borrowing and lending and using more derivative assets to collateralize for borrowing. So, do you anticipate there to be more and more attacks? Like, does the attack surface open up with projects like Umee entering into the Cosmos ecosystem?
Yeah, that's a good question. I think the way to look at it is that so what's interesting about DeFi is that in this over collateralized ecosystem, one plus one is always roughly is two. One plus one is two. Like there's never a scenario where you're giving groups more leverage than their collateral can sustain. Everything's over collateralized, so that actually creates a new fascinating dynamic that didn't exist in TradFi. TradFi is based on credit, and credit is a very amorphous concept that is not really as scientific as you'd like it to be.
Yeah, and it's
Um,
totally KYC'd, and
it,
it could lend itself to social credit scores if you're a bad person in society.
yeah, no one wants to be bad. No one wants
Yeah,
to
if you
do.
tweet something wrong, you get bad social credit.
No one wants to question the government or question the authorities. Like, why would anyone do that? um, but yeah, to answer your question about like daisy chaining collateral, um, yeah, that's absolutely a challenge. I think that the key to doing it right is that there can't be over hypothecation. There can be, reuse of collateral, like, from the osmosis perspective, they have this, new approach to allowing staked assets to be used as like LP tokens. Um, as long as you do it right and you make sure that you're not rehypothecating these different collateral into like different ecosystems beyond what is reasonable, I think things can be done safely. Like, think of when balancer LP tokens for like stablecoin pools were used as collateral on AAVE. Like, that was a pretty nice step, and it works. These are safe collateral. I think the key is that the DeFi protocols themselves need good risk metrics. They need a good risk management system to just assess different collateral qualities and ensure that these are good assets. They're not going to undergo like a rug pull or get people wrecked.
Yeah. What do you anticipate happening with let's say osmosis, right? If they have a token pair, like a highly liquid token pair, like, or on one side, let's say Atom to and shitcoin. All right. So shitcoin chain gets corrupted, one person runs that chain or something, and it just tries to drain that Atom pool, like what prevents that from happening?
Yeah, certainly. And I think this goes directly to IBC itself. So, a lot of people talk about IBC. It's perfect for self-sovereign networks. Uh, there's this framework I've heard from the Paradigm team that it's about dimensionality of the protocol. Like, Ethereum has high dimensionality, Bitcoin has low dimensionality, and that's why Bitcoin's a great store of value. Ethereum, all the DeFi stuff, all the ERC20s are dimensional, but they fit within the homogeneous consensus that is, Ethereum proof of work. And then Cosmos sits sort of in the middle as this ecosystem that has pretty high dimensionality, but a lot of interoperability based on IBC. And the key is that, like, with IBC, it sounds like the way things are configured is that if there's like sort of, as you mentioned, shit chain that doesn't do well, that runs away with the funds or just like doesn't ship, and that shit coin is in like the same LP pool as like a well-established asset. Um, Unfortunately, the initial attack can't be rented, but afterwards, once it's discovered that the not so good coin is bad, that network should be able to be lopped off from the rest of the IBC networks. It should be just not accepted, especially on a borrowing and lending protocol, like, because the acceptance of collateral is based on governance. So likely, if there's like a not so good collateral, that can just be gotten rid of as an acceptable collateral on the protocol.
Yeah, so that kind of paradigm is I think that's part of the design of like Aave and Compound, for example, right? So like Compound is more conservative in the coins that it allows to be used as collateral, whereas Aave kind of is more permissionless in, well, not permissionless. It's more flexible and open to a lot more collateral assets in the longer end of the long tail. But on Umee, what's the design decision, right? Like, what are you going to allow to be collateral, and what are sort of the risk mitigations you have in place if, let's say, you happen to whitelist a token that ends up being a shit token?
Certainly. And so, initially, with Umee, the accepted collateral and tokens to be used for borrowing will be likely the largest cap tokens with the most liquidity. So, definitely, Cosmos Atoms. So Cosmos Atoms will uh, initially be accepted on the Umee borrowing and lending protocol. On the other side of the spectrum, what this protocol helps is people to access stablecoins. So stablecoins like UST from Terra, these will be accepted. Additionally, stablecoins from Ethereum will be accepted, like Tether, USDC, and DAI. And so I'd say that Umee is initially taking a very more safety orientated approach to which assets are listed. Um, if there's ever a situation where an asset passes governance and it turns out to be like not so good collateral, then the goal is for governance to also figure out a way to no longer accept that token as collateral. But if the right risk parameters are instantiated, hopefully the only assets that are accepted are the ones that are just good quality and able to be used as collateral for some of these activities.
Okay, understood. So Umee protocol is going to be more conservative, kind of edging on the compound side rather than being completely open to just all the coins.
Yeah, you can kind of say that, but we are very open to figuring out cross-chain liquidity mining, cross-chain staking opportunities, and yeah, we'll figure out how things move forward.
Okay. All right, let's touch on the architecture. How is this how is this set up architecturally? Right, you said we could do this between we could do borrowing and lending between ERC20s and Cosmos native assets. How's that done?
Certainly. So Umee has three main pieces. So there's a borrowing and lending protocol on the Cosmos side, built on Cosmos SDK modules. There's a borrowing and lending protocol on the Ethereum side, built with Ethereum smart contracts, and we're using a gravity bridge, so a bridge to bridge between Cosmos and Ethereum. We worked on this stuff at Tendermint, Peggy, just redevelopments of Peggy. I'd say that in terms of gravity bridge, we want to figure out the best way to bridge assets back and forth. But the key to how Umee works is that a user can deposit Cosmos assets on the Cosmos side. A collateral token is created, and that collateral token can be used as collateral via the gravity bridge as collateral to borrow assets on the Ethereum side. And the goal is that after they borrow those ERC20 tokens on Ethereum, they have like a bunch of DAI, they have a bunch of Tether, they have a bunch of USDC. They can actually bridge that back to Cosmos using the gravity bridge, and perhaps use those tokens to buy assets on Osmosis or other dexes in the Cosmos space. And so we definitely want to build a multi-dimensional bridge for activity to do quite a bit of DeFi stuff.
Yeah, that's really exciting. So maybe walk us through a user story about like what's possible in the future, right? Somebody starts in Ethereum, wants to enter into the Cosmos ecosystem to buy something that's not listed, let's say Osmosis, and they want to use ETH and they just wrap ETH, use it as collateral, send it to Umee chain, borrow a UST because UST is listed on Osmosis, send that to Osmosis, and then buy some Osmo. I just told the user story for you. Sorry. What else do you got?
That was perfect. That is exactly what we want to happen. Someone take some ETH, buy some assets from or borrow some assets like UST, like Terra from the Umee borrowing and lending protocol, and use that to buy other assets on Osmosis. That's a perfect user story. Another one could even be like, let's say I have a bunch of stable coins, like I have a bunch of USDC, Tether, and DAI. I can deposit it on the Ethereum side of Umee, earn that lending yield, and I can actually use that collateral to borrow Cosmos atoms and stake the atoms on the Cosmos hub. And as I'm staking the atoms, I'm both earning the lending yield from the stablecoins as well as the proof of stake yield from the Cosmos atoms that are staked on the Cosmos blockchain. So Ethereum stablecoin holders can participate in proof of stake, and they don't have to sell their tokens. They don't have to trade. They can just do it.
Ooh, I'll do you one better. What if you could take your Ethereum ERC20 stablecoin, collateralize it on Umee, you would get your collateral token. That collateral token is listed as a token pair on Osmosis, and then you LP it, take the GAM, the Osmosis LP token, and then stake it back using superfluid staking or interfluid staking onto Atom, onto the Cosmos
Oh,
Hub.
oh my goodness. Okay,
Yeah,
okay. I
so
think
again, daisy chain.
it's unavoidable. I think we're trapped.
Yeah, so that being said, what is the security model of Umee chain, and if we're gonna daisy chain these protocols together, and just collateral on top of collateral on top of collateral to earn yield on different chains, like what's the security model that prevents all of this from falling apart?
Yeah, so we got some great engineers on our team. Um, Bez is leading development on the Cosmos side. We got some really good developers working with Bez right now, and basically the key to this is having the right liquidation bots. So we saw with MakerDAO back in like Black Thursday of 2020, where there was a precipitous drop in the price of ETH, which resulted in liquidations, but the liquidations couldn't happen fast enough, and DAI became, you know, under collateralized, and we had to have a white knight in the form of Paradigm to help save the day. Luckily they did. Those types of scenarios were kind of persistent in Ethereum because it's a probabilistic finality blockchain. Liquidations weren't able to happen as quickly. We saw a little bit of challenges with Compound when one of the price oracles was affected and caused the price of DAI to increase above $1, and that also proved to be detrimental. With the borrowing and lending platform built on the Cosmos SDK, which is a fast finality blockchain that uses Tendermint proof of stake consensus, and has fast finality transactions. The hope is that liquidations can happen much faster, and just much more actively. And based on those quicker liquidations, we hope that it contributes to the security of the DeFi protocol, so that things can just happen more efficiently.
But can you explain why faster liquidations is ideal? I would have thought that, um, from the user standpoint, we would not want liquidations, and in fact, we want to protect users from liquidations, and those sorts of that kind of volatility as much as possible. So why is that needed for the security of a protocol?
Oh, certainly. And no one likes to be liquidated. Like liquidation is definitely a um, not a fun thing to happen to a user because they lose their collateral. Um, the but the goal is to really maintain the integrity of the DeFi protocol. And as I mentioned earlier, one plus one always equals two in this DeFi world. In that, like, if a loan becomes under collateralized, it should be liquidated, or if it falls below its over collateralization ratio. So maybe 150% collateral is the ratio, and if it falls below 150%, then uh, things get liquidated. We have also done quite a bit of an analysis and research on like gradual liquidation, where liquidation threshold becomes greater and greater and greater as you fall lower and lower and lower on the gradient of how under collateralized you are, or how below the over collateralization ratio you are. So um, I think in ways we're kind of balancing. We want to protect the users, but we also want to protect the protocol. How do we ensure as a network, as a DeFi protocol, that the right levels of safety for all counterparties is maintained in the network.
But if Umee is a proof of stake blockchain and the security of the blockchain is dependent upon network stake, why does a, let's say, 80% drop in an underlying asset's price lend itself to the security of the protocol?
I want to understand the question a little bit more. Like, is this pertaining directly to the staking asset, or is this more pertaining to the collateral?
Pertaining to the collateral, right? So if there's a like 80% drop in price, let's say, and we're talking about massive liquidations, why does the security of that lending and borrowing platform rely on liquidations rather than just on the underlying staking mechanism? There's like the proof of stake chain is going to be secure no matter what the price is, because it's denominated in the native asset of the staking token. Sorry, denominated in the staking token, which is the native asset of the chain. So in that sense, the security model isn't affected by like 80% drop in price of any token, right?
Gotcha. Okay. Yeah. Yeah. I think that's a factor. So when it comes to a protocol, price is just one of the factors. These networks are still secure. So I think I was referencing more on the security of the DeFi protocol itself, as opposed to the security of the underlying network, of the underlying blockchain network. Yeah, I mean, when it comes to uh, blockchain networks, I'd say that we're lucky to be in the Cosmos space. All the tech that we're building is tried and true Cosmos SDK. Like, this ecosystem is pretty robust in terms of the solid amounts of developments that are happening, and because we're building on Cosmos SDK, Tendermint BFT consensus, as well as one of the most tested consensus protocols in all of crypto. Like, I remember, like, back in the early days when Vitalik was talking about proof of stake, Jay Kwan and Ethan Buckman were with him. Like, things such as like slashing conditions, bonded validators. These are all like ideas from Jay, in the early days, and that the Ethereum folks were also bouncing ideas back and forth and figuring out ways of implementing. And so, based on the foundation that has been set in the Cosmos space since the early days, I think there's a lot of trust that can be attributed to networks built using the Cosmos SDK, and that's why we kind of see Umee as being able to benefit from a lot of that very structured research, very solid fundamental development when it comes to this protocol.
So you did mention that Black Thursday happened on MakerDAO because, and it was hurt by Ethereum's probabilistic finality chain. How is a BFT proof of stake chain like a Tendermint chain different and better in terms of securing these DeFi protocols?
Yeah, certainly. And I want to say I actually I love Ethereum. Like, Ethereum's like my favorite network. That being said, I will say that the scalability allowed via Tendermint BFT proof of stake consensus, as well as the ability to maintain safety over liveness in this proof of stake world is key. And also, these are fast founding networks. I think one key consideration is that in Ethereum, every network, or every token, is all reliant upon one underlying homogeneous consensus, which is Ethereum proof of work. But with Cosmos, we have every network is its own blockchain, self-sovereign blockchains, and they're all connectable by IBC. IBC, this module from the state machine of one blockchain that relays messages to a module of another that basically, is able to be the most standardized communication protocol. I'd say that, I actually you were with us. We had dinner at DevCon 5 in Osaka with Vitalik, Justin Drake, Danny Ryan, with Christopher Goes, Zaki, Jay, and yourself, and we sat down and had dinner, and we talked about how IBC can be used for Ethereum 2.0. And one idea was that IBC can be used for cross-shard communication with ETH 2.0 shards. Christopher Goes gave a talk on IBC for that same purpose at EthCC in Paris, like right before COVID hit. And then Georgios tweeted about IBC being implemented in Solidity like a few months ago. I still remember that tweet. And basically, that's the difference. Like all Cosmos networks are they can connect to each other with IBC and have fast finality transfers of tokens between each other because they're based on a fast finality consensus protocol. And additionally, these can connect with other networks like ETH 2.0 shards, rollups, even networks like Polygon, Solana, Avalanche. Like all of these could feasibly integrate IBC, and so that's what makes Cosmos pretty sweet. It's like a fast finality, and there's a common communication protocol that connects everything.
Great. Let's look into the future and let's do some crystal ball reading, which is, you say that IBC was just integrated into Solidity, which is very exciting. And, once more and more people leverage this tool on Ethereum, they're going to be able to seamlessly transact with the Cosmos ecosystem. So, in the future, when we have this sort of network of networks, right, the internet blockchains or the Web3 or the decentralized web, right, all of those are synonymous with each other. In that type of world, in a fully mature space, what do you think people would be able to leverage in DeFi at that point? Right? Is it going to mirror something similarly to TradFi, except on a decentralized blockchain network, or is it going to look like something fundamentally different?
Yeah, that's a good question, and also kind of a fun question. So my one takeaway from my crypto experience is that I was working with Billy Rennicap and Sonny Garwell at ETH Waterloo. I think this was back in 2020 or 2019, and we did this hackathon project. Basically, we wanted to use Google Sheets as a sidechain to Ethereum. Basically, we used Google OAuth to sign Ethereum transactions, and we sent Ethereum into Google Sheets and allowed it to be manipulated in the spreadsheet and used in different ways in the Google spreadsheet. I'm pretty sure Sonny came up with the name and the idea. He called it Sheetcoin. That was hilarious. We had so much fun. I think it became a meme at ETH Waterloo. But in addition to that being just the coolest project, we also it actually opened up my mind to what's possible. I think once all these blockchains are able to talk to each other, we have rollups, sharded execution environments, data availability, scalability, IBC connecting everything, and all blockchains talking to each other, and no longer will people argue which blockchain is which. It'll be sort of one network. I think we would see something as seamlessly usable as just this really interconnected ecosystem. I forgot, it might have been Eamon Gunsire who talked about this. Sort of the woke idea is that exchanges are technically the side chains of 2019. An exchange is a side chain. It just happens to be super
Yeah, they're an
centralized.
off-chain sidechain, right? Yes,
They're off-chain side chain.
absolutely.
We've had folks like Jim talked about this with us. I think the world will be interconnected by all these blockchains, and the side chains will be decentralized and things are going to be working pretty well, and maybe someone will build Sheetcoin. Who knows?
Yeah, exactly. So in that world, at that point, I think, 10, 15 years from now, that actually all the underlying blockchains are going to be abstracted away such that there's only one network because they're going to be connected via IBC or some other communication mechanism. I think it's going to be IBC. And yeah, at that point, we have a network of networks similarly to how we have an internet where the PCs are all just connected to each other, right? So it's going to be seamless as that. Maybe give it 15, 20 years conservatively. All right, let's talk about tokenomics. You've got the Umee token, you've got collateral tokens. So let's talk about all the tokens that are going to be launched here.
Totally. So the Umee token itself will exist as both a Cosmos SDK based token as well as an ERC20 via Gravity Bridge. So these tokens can be bridged to Ethereum, and they can be sent to any EVM compatible chain like the Avalanches of the world, Polygon, Phantoms, XDAIs, Arbitrums, Optimisms, even Solana. Like these will be possible via something like Wormhole. So the token, is designed to be as persistent across blockchains as possible. And of course, once they obtain it, they can bridge it back to Cosmos and stake it on the Umee network and participate in proof of stake consensus. The token was designed the same way as the Cosmos Atom, basically in terms of staking and inflation mechanisms. You can expect similar dynamics as the Cosmos Atom, and basically, these are the underlying fee for the Umee core borrowing and lending protocol. In terms of other tokens, they would include the collateral tokens. So basically, the U token and the Me token. So these are two of the collateral tokens that can be used as collateral for borrowing and lending between Cosmos and Ethereum. The U token is very simple. It's similar to the compound C token or AAVE token, in that it can be used as collateral for borrowing and lending between blockchains. The more complicated token is the Me token, which will be a liquid staking product, and we're actively figuring out the right architecture for this solution.
Yeah, just to go back to fundamentals, can you explain the AAVE token versus the AAVE C token?
Yeah, certainly. So AAVE token and compound C token, the way that these work is that when you deposit any asset onto Aave, um, what you get in return is actually a collateral token, or some people call it collateral token, some people call it
A
LP token.
tokenized version of the collateral, right? It's a tokenized representation of your Aave collateral or whatever collateral you collateralized.
Absolutely, that's correct. And that tokenized version of the collateral is what is used as collateral on the borrowing and lending platform. You can use that tokenized collateral to borrow other stuff on Aave, and then vice versa. The original assets that you deposited into Aave are actually available for other people to borrow. And so, the same applies to compound. The main difference between the compound C token and Aave token is that the compound C token is based on an exchange rate, and the Aave token experiences a type of inflation or interest that accumulates to the token. But for all intents and purposes, they serve the same use case. But the pretty brilliant stuff. Dan Elitzer had some good ideas back when he was thinking about this stuff, and I say this a lot. I think we're building, we're standing on the shoulders of giants with like MakerDAO, Aave Compound, and we're learning every day and just figuring out how to build the best stuff out there.
Yeah, so when you say 1 + 1 = 2 in DeFi, that's what it means, right? Because you just have like one unit of Aave, and then you collateralize that, and then you get a Aave token, the token representation of that collateral, and then you could use that to stake as well. And then you'd lock it up and borrow against it, or you could use it for staking.
Certainly, yeah, exactly. And with the sort of 1 + 1 = 2 analogy, like, there's no rehypothecation. It's not like I deposit 1 ETH and I get 2 AAVE tokens from the ETH. I get one to one, exchange. And I think that's important for DeFi, like being able to maintain those. Uh, the key to this is the transparency. The fact that this is all on a public blockchain is the reason why any of this works, because you can audit and confirm that assets weren't like rehypothecated. Unlike TradFi, where in TradFi, like if someone uses their house to get a loan and then somehow or another they figure out how to use their house to get another loan, that's like asset rehypothecation, and it's pretty bad. It's like not the most um, transparent way of doing things, and but that unfortunately is a potential downfall with TradFi.
Yeah, and we definitely need transparency for our black hat auditors to come in and fix the system.
Oh, certainly, our
Our black
absolutely,
hat.
yeah. The gracious, yeah.
Yeah, so this is interesting. Can you tell me more about the Ethereum ecosystem and how this works? Because I'm not as familiar with that. Which is, are there pools on Uniswap or Sushi or any of the big AMMs that allow for LPing of LP tokens?
Yeah. So, uh, yeah, Ethereum's, I feel like, has done all the experimentation, and they've done like all the stuff, like just different permutations of ideas, and there's actually a lot of smart folks out there. Yeah, I think I mentioned earlier that the allowing balancer LP tokens as collateral for borrowing and lending on Aave is a big one. Um, I think that things can get pretty creative, like
Yeah, there's
allowing
also
like
like the Urine Vault interest bearing tokens as well, and then you use that to borrow a stable coin against it, and there's like all the stuff that you can do. So, like, what's at the forefront of Ethereum DeFi farming right now?
totally. Yeah, I think urine definitely is um, uh, one of the most innovative places. I think SushiSwap has had a lot of interesting innovation. So I think one of the things that they did that was most interesting was that, in Uniswap there's this like huge like governance debacle around taking 5 basis points from every 30 basis point fee from all of the Uniswap transactions, and
That's
allocating
still
it.
way lower than TradFi. Like, you go to
So
Vanguard, you go to Goldman, they take 110. So that's standard.
it's wild. Yeah. They want their pound of flesh. But what was interesting is that SushiSwap, they executed. They basically allowed X Sushi, um, uh, this X Sushi platform that basically allows you to stake your sushi tokens and earn, that 5 basis point spread from every transaction on SushiSwap. I thought that was pretty cool. I thought that was like, the right way to approach, some of the developments in the space. That being said, the space is a lot of development, a lot of innovative ideas. You're absolutely like urine vaults, being able to use these. Um, One project that I do like a lot, with some of my former consensus colleagues, is with Johnny Ray and Will Villanueva with Element .fi. They're doing something really interesting where they're basically allowing yield products to be um, encapsulated in like a duration based smart contract, where basically you can expect a urine vault yield based on a certain time duration that gets split into a principal token and an interest token. And the most interesting piece of this protocol is the principal token, because the principal token is effectively a zero coupon bond or a forward contract. And if you make an AMM pool with a spot asset and then like a forward contract, what it does is that AMM pool is representative of the time value of that asset based on that particular time period. So if you have like a 1 month ETH in like a forward contract and a spot ETH and an AMM pool, the price of that 1 month ETH to purchase that 1 month ETH in that AMM pool is indicative of the time value of ETH in that particular time period. And so I like that one a lot. I like those folks. And
Interesting.
yeah.
Can you disambiguate for me? There's the principal token, right, which is denominated in the underlying asset that you've collateralized, and it's the exact same nominal amount that you put in. And then there's the interest token, which is whatever else, whatever interest that's built on top. Are you saying these two tokens are in the same pool to create like a time value curve, or are these two separated in different pools and then you put one in one pool and one in another?
Yep. The latter. So they're in separate pools, and it's when you actually take the principal token, the one that represents like 1 month or 6 month or 12-month principal, and you put it in a AMM pool of like normal ETH, like just normal
Okay.
everyday spot ETH. That's where the real information comes out, and that's actually a highly useful information, because the free market price of that pool really is a time value determination. And so that's something that we like, and we're looking forward to building on top of. Of course, the interest token can be in a separate pool, and that's a different story.
That's a different thing. Okay, so the time value indicator comes from the principal ETH to ETH pool.
That's correct. It's a little bit like how treasury bonds indicate like time value of like the US dollar.
Via the yield curve?
Via yield curve. So earlier I was talking about like time value of money, how we define time value of crypto. This is done traditionally in TradFi using something known as the term structure of interest rates, or in other words, a yield curve. And so term structure of interest rates basically give you an idea of what a dollar is worth in 2 weeks, 4 weeks, 2 months, 3 months, 6 months, 12 months.
With inflation built in.
With inflation built in. And these are, a lot of these metrics are determined by the Fed. So, Federal Reserve makes decisions around interest rates. They make this determination based on different economic factors like inflation and just economic development. And so what folks are trying to do with these decentralized yield curves is figure out how to redefine that, because right now these interest rates are determined by central government. What if we let a DeFi ecosystem determine them? What if we put it into the the hands of the DeFi protocol? And so that's why I like Element, and there's a few others out there that do similar stuff. But yeah, it's really exciting. Yeah.
So is the AMM curve in the ETH and ETH principal token pool indicative or analogous to the yield curve in the treasury bonds paradigm?
Well, here's the thing. That's a great question, because in treasury bonds, those things are done by trading desks, by humans that pick up phones and say, "Hey, do you want to buy, a 30-year treasury? Hey, do you want to, buy some notes, buy some bills, buy some bonds?" In crypto, we don't have that. We don't have like guys answering phones and trying to like
Yeah,
sell
well,
each
we
other
have a free
bonds.
market here. We have like actual users participating in the market, and then we have protocols competing with each other in a totally unregulated space. It's a totally free market.
We got AMMs, we got open source technology, we have transparency. And so to answer your question, yeah, it's kind of like that, but with open source tech. We've replaced
Okay.
the guy on the phone.
Great. That's great. Yeah, last question. Why borrow instead of sell? To all the people who are kind of skeptical about DeFi, right? Because it's the devil that they don't know versus the devil that they do know, right? They instead of leveraging the benefits of DeFi, they would instead sell and try to time the market. And I think it's much more powerful to be able to collateralize using an underlying asset and not have to sell it in order to take profit on any sort of price appreciation and get a tax hit. So, why is this important? Like, why are you building this thing?
Yeah, so I think when folks think of Umee, I think one, I want them to think of this base layer protocol, this DeFi hub that we can build so much stuff on top of. And the other thing I hope folks think about is that um, we want to redefine debt. We want to redefine borrowing and lending in a way that users are able to universally access this, because we think that these rights are kind of universally persistent upon all humans to be able to be trusted with debt financing and different borrowing components. And I think you did mention earlier, like yeah, selling incurs many different dynamics as opposed to being able to leverage. And there's a book out there called Debt, and basically it's the idea that this concept of debt and lending is one of the most persistent pieces of human society. It is fundamentally rooted in human society since the development of civilization. Like back in the back before fire was invented, communities gathered around and just made group promises. This was their form of debt, that they would do something. And so yeah, I'd say that with what we're building, we want to encapsulate that same spirit. We want to basically redefine how debt should be built, how debt should be structured, and figure out the right way to build this using new technological paradigms and not rely on um, existing TradFi stuff. And so definitely debt's important. Don't want to sell. I think part of it is just building the right infrastructure for humans to basically allocate this trust, because at the end of the day, we trust the blockchain, and this is sort of like the perfect tool for creating these use cases.
Yeah, and I was saying at Decentral about how DeFi is a one-way street, right? So CeFi is kind of the on-ramp that people in the mainstream tend to need in order to get onboarded into DeFi. But as soon as you get into this crypto paradigm, you kind of don't want to leave, especially as it's so costly to have to off ramp back out into fiat, right? So if we're able to leverage the benefits of CeFi instruments in DeFi, then why do we ever get out? So that's the type of powerful message that I'm taking away from this.
Absolutely. I mean, I think you said all that is needed to be said on that subject.
Yeah. Okay. You guys did a token sale. Like, any other updates? Like, what's going on there with recent events? We'll just do like a high level, and then take any questions from the audience if there is any.
Yeah, certainly. So we did a coin list sale. The entire sale sold out in less than an hour. Basically, we're really grateful for the community. We're really grateful for the supporters out there, who want to participate. The purpose of the coinless sale really was to, bootstrap, just get as much community involvement as possible. And this, we heard from Coinlist that uh, this Coinless sale had the largest amount of registrants in the history of all Coinless sales to this date. And so, we're really happy about that. We're just deeply appreciative of the folks that wanted to be part of the Umee network and the Umee ecosystem.
That's great. So what was sold? Was it Umee tokens, but not you and me, right? Not you and me tokens.
That's correct. Just the Umee governance staking tokens. Yeah, that's correct. The
Okay.
UME tokens. Yeah, we're not. Yeah.
Okay. Uh, that's great. Yeah. So when do you expect this thing can go live, and when can people start minting UME tokens and collateralizing assets, Cosmos native assets?
Certainly. So, we already have an alpha mainnet up and running. In terms of a full functionality, and token release, we're expecting on or around mid-February for that time period for folks to basically start using this and to using the protocol and interacting and uh, you know participating in the living breathing network. So that's the time period. We're also expecting adversarial testnet this month, as well as a mainnet next month. And so yeah, definitely be on the lookout. We're looking forward to shipping all this stuff.
Last question. Do you expect there to be a future where people could tokenize securities such as private equity and be able to use that as collateral to borrow against crypto assets? Like, is there a world in which that can manifest, or do you think regulation is just going to not allow that to ever happen?
That's a great question, and I feel like um, we're constantly have this just as a society sort of this internal back and forth between shifting to new technological paradigms, trying to achieve the future. The future is coming. The future will emerge. Of course, there'll be forces to try to slow things down and slow down the acceleration. Um, I talk about this a lot. Like we want NFTs to be used as collateral for borrowing and lending. And what you just described is, a nice first step. So things like private equity assets, things like, persistent among like enterprise. I think these would be great collateral for future collateralized borrowing and lending on DeFi. And I think, you and I have been in this space for a long time, and based on the Lindy effect, we're just going to stay here longer and longer. And so, like we're willing to spend the next 10, 15 years building this. This is where things are going, and we definitely see it. So I do see a future where that stuff can happen.
Oh yeah, yeah. We're gonna be here for our entire careers. I'm gonna be an old lady before I retire out of crypto.
There you go.
Yeah. Yeah. The NFT thing, somebody actually showed me an app on Ethereum. I forget the name of it, but what you could do is collateralize using your punks. And so you send your punks to a custodian, the smart contract, and then you're able to like mint like NFT debt off of it or something like that. Like I think you could borrow off of it. But anybody who puts in 120 ETH, I believe that was the threshold, is able to withdraw any punk in that treasure trunk. And so I thought that was pretty interesting. Right, like borrowing off of NFTs. So I don't know if you know the name of that project. I actually can't think of it off the top of my head, but
That's really cool. Yeah, I was chatting with the Figment folks. They have some pretty cool ideas around the NFT side of things. Yeah, give me some punks. Yeah, I'm down. Yeah, I feel
yeah.
like yeah.
I mean, yeah, I'm really excited about that because talking to Ethan Fry, who's built Cosmosm, and then talking to the Osmosis folks who are going to uh, they're going to implement Cosmosm and plug it on top of Osmosis. And so once we have a bunch of different chains kind of speaking the CW token standards, like CW 721, then they're going to be able to do like send NFTs cross chain. And so once you have, I don't know, like a non NFT on Secret Network, and if it's speaking CW 721, you could send it over to Osmosis. Collateral, or you could send it to Umee, right? If you guys also speak CW Cosmosm language, then they could collateralize their non NFT, and then later borrow against it, send it to Osmosis, swap for Atom or Osmo or whatever, and then do what have you. So this only gets crazier from here, guys.
I love it. Yeah, Cosmos is definitely a major step, and I can't wait for just the development that's happening there. And yeah, I want to trade the NFTs and use them as collateral. Cross-chain NFTs is just, it's going to be huge. Like, it's going to be pretty big part of the ecosystem. So
Yeah,
we're excited. We're
can't
down.
imagine regulators being happy about that though.
Yeah, it's a tough one. Not everyone can be happy in this space. It's just.
I mean, they're going to call it a security. They're going to call NFTs a security.
Man, imagine punks, crypto punks. I don't know.
I believe they're already trying to call CryptoPunks a security, but it's. I think if you look at NFTs as a piece of art, it's more analogous to the art world, right? But in the art world, it's completely non-transparent. It's so opaque, and anybody could launder money through art, right? Because art changes hands so much. People in the cartel could sell art to another member of the cartel and then therefore launder money through it. And yet that space is completely unregulated. And yet they come after crypto.
What do you think of people who don't like physical possessions anymore? They're like, you know what? Like,
that's me.
Yeah.
That's actually me.
Like, what's the deal with physical possessions? We can just live in the digital world, which works.
Yeah, which makes sense, and which is why I think a lot of people find the metaverse space really appealing, and NFT gaming, right? They really like their online avatars and for it to have certain attributes. I met someone building an NFT game, and he had like a NFT, like a jetpack, right? And that's supposed to be like super rare or something like that. And anyway, you just like use your phone, implement some AR or overlay some AR on top of it, and then you've got your, I don't know, your digital flex. I don't get
it. Oh man, yeah, I feel like that space is moving fast, and yeah, I mean,
we're gonna have digital tungsten cubes soon.
Yeah, future. I love it. Yeah.
All right. Thank you, Brent, so much for coming on to Interchain FM. It's been great. Very excited to have Umee launch early next year. That's when things are probably going to explode, because that's also at the same time when a lot of other things are slated to launch. We're going to have Ethermint, or I guess Evmos, that's what it's called now. We're going to have Penumbra, these other chains, Umee, and then Osmosis is going to have Superfluid, as well as maybe Interfluid staking by that point. So this is really exciting. I'm really excited for 2022 because there's just more to be built and more to come than there is even this year. Who could have thought? So thanks to the audience for tuning into Interchain FM. Thank you to Brian Luke, who helps me produce these shows. And we've got the next interview lined up. It's going to be Axelar Network. We're going to have Sergey on. Him and I were on a panel at Decentral. And so he's going to speak about building a proof of work bridge. Or sorry, it's not proof of work. He's going to build a bridge between proof of work blockchains like Bitcoin and Handshake to the Cosmos network. And so that's going to be really, really exciting. So if you want to listen in on that, tune in next Thursday, and I'll see you then. Bye.